Welcome back to Dejan's Journal, your daily shot of crypto truth with zero fluff. If you missed the daily drops, don't worry. Here are the 5 most important stories from the past week that you absolutely need to know. Let's dive in. Headlines: Japan's Metaplanet now holds more Bitcoin than Tesla. Trump-backed World Liberty prepares its first stablecoin audit. Invesco Galaxy joins the Solana ETF race. 77-year-old widow loses $282K in crypto ATM scam. Bit Digital dumps Bitcoin mining to go full Ethereum. Story 1. Metaplanet flips Tesla in BTC holdings. Big moves from Japan, and they're making noise on a global scale. Metaplanet, Japan's largest corporate Bitcoin holder, just added 1,234 BTC to its balance sheet, bringing its total holdings to exactly 12,345 Bitcoin. With this latest purchase, Metaplanet has now officially surpassed Tesla, which holds approximately 11,509 BTC in total corporate Bitcoin reserves. That puts Metaplanet in 7th place globally, among public companies with Bitcoin on their balance sheets and within striking distance of CleanSpark, one of the biggest Bitcoin mining firms, which holds just over 12,500 BTC. The average purchase price was around 15.6 million yen per Bitcoin, or roughly $108,000 USD, signaling a confident buy-in despite Bitcoin's recent sideways trading action. But this story is bigger than just numbers. Metaplanet is quickly becoming Japan's version of MicroStrategy, using Bitcoin not just as a hedge, but as a core component of its treasury strategy. Backed by Japan's favorable crypto regulations and a growing appetite for sound money alternatives, this could mark the beginning of a broader corporate adoption trend in Asia. If the US had its Bitcoin moment with Sailor and MicroStrategy, is Japan about to have its own with Metaplanet? And if so, who's next? Story 2. Trump-backed World Liberty teases WLFI surprise. At the permissionless conference in Brooklyn, Zach Folkman, co-founder of the Trump-linked crypto project World Liberty Financial, dropped a few major developments and sparked speculation across the industry. First, the company confirmed that it has completed its first stablecoin audit. The attestation report, completed by a third-party accounting firm, will be published in the coming days, giving investors their first transparent look into World Liberty's reserves. But the bigger teaser was about WLFI, the platform's governance token. Until now, WLFI has only granted voting rights, with no transferability, meaning holders couldn't trade or move the token. That could soon change. Folkman hinted at a significant shift in the token's mechanics, stating, "I don't want to give away too much, but if you pay attention over the next few weeks, I think everyone is going to be very, very happy." In addition, World Liberty is preparing to launch a new crypto app aimed at retail users, with a goal to simplify crypto access ahead of the 2024 US election cycle. The implications are big. With growing political alignment and increasing visibility, World Liberty could become the flagship crypto vehicle of a second Trump administration. It's not just about launching a token, it's about creating an ecosystem that aligns with a political brand and potentially a regulatory shield. Will WLFI become the go-to political token of this cycle? Or is this just hype without traction? Either way, eyes are watching. Story 3. Invesco Galaxy files for Solana ETF. Is Sol the next institutional darling? It's not just Bitcoin and Ethereum anymore, we may be entering full-on SOL SCN. Investment giants Invesco and Galaxy Digital have just filed a spot Solana ETF, becoming the 9th issuer to do so in the US. This growing pile of filings, which already includes VanEck, Grayscale, Bitwise, and others, signals that institutional demand for Solana exposure is heating up fast. Why now? The success of Bitcoin ETFs earlier this year cracked open the door. Then came Ethereum ETFs, albeit with a more muted launch. Now, the market seems hungry for what's next, and Solana is the obvious candidate. Currently ranked as the 6th largest cryptocurrency by market cap, Solana is known for its speed, low fees, and growing DeFi and NFT ecosystems. While previously considered an altcoin for speculators, it's now gaining credibility as a Layer 1 competitor, with serious traction and potentially institutional appeal. If the SEC approves even one Solana ETF, it could validate the token's role in diversified crypto portfolios and spark a flood of traditional capital into a network once seen as too volatile for serious investors. But there are still hurdles. Unlike Bitcoin and Ethereum, Solana doesn't yet have the same legal clarity. And with 9 filings now in play, the question isn't just if, it's who will win the race to launch first. Could Solana ETFs become the bridge between Wall Street and the altcoin world? Story 4. Elderly widow loses $282K in crypto ATM romance scam. This is one of the most devastating reminders of crypto's darker side. As part of a federal sting targeting crypto ATM abuse, Australian police uncovered a heartbreaking case. A 77-year-old widow, believing she was in a long-term online relationship with a Belgian man, was scammed out of over $281,000, nearly $433,000 AUD over a 2-year period. The scammer, posing as a romantic partner, slowly manipulated her into sending large sums of money through crypto ATMs, converting her cash into Bitcoin and funneling it directly to the fraudster. At one point, she reportedly carried $13,000 in cash to deposit. She had no idea she was being scammed until police showed up at her home. The sting operation was part of a broader investigation by Austrac, Australia's financial intelligence agency, targeting pig butchering scams and crypto ATM misuse. This case is not an isolated incident. With over 90 Australians contacted during the operation, it's clear that crypto ATMs are becoming a tool of choice for scammers, especially in targeting the elderly and emotionally vulnerable. Now, regulators are facing a difficult choice. Do they tighten restrictions on ATM use, requiring more ID checks and transaction limits? Or is the better path to invest in education and digital literacy to protect vulnerable populations? Either way, this story is a powerful reminder that while crypto opens doors to financial freedom, it can also be weaponized against those least prepared for it. Story 5. Bit Digital abandons Bitcoin for Ethereum, the start of an ETH-centric future. In a bold and somewhat unexpected strategic pivot, Bit Digital, one of the better-known players in the Bitcoin mining space, has announced it will completely exit BTC mining and transition into a full-fledged Ethereum staking and treasury firm. The move involves several coordinated actions: selling or winding down its entire Bitcoin mining infrastructure, converting all of its remaining BTC reserves, 417.6 BTC as of the 31st of March, into ETH, issuing new stock to raise capital, with the majority of funds earmarked for buying even more ETH. If all goes according to plan, Bit Digital's Ethereum reserves will rise to over 42,000 ETH, positioning it as one of the largest publicly held ETH treasuries, rivaling or even surpassing some crypto-native firms. But why abandon Bitcoin, the original crypto asset? According to Bit Digital, it's about future yield, utility, and adaptability. Ethereum, post-merge, has transformed from a proof-of-work coin to a yield-generating staking asset, which, for a company like Bit Digital, means reliable passive income. In contrast, Bitcoin mining is becoming increasingly difficult and less profitable, especially after the April 2024 halving. Rising energy costs, environmental scrutiny, and falling hash rates have squeezed margins. Meanwhile, Ethereum staking offers scalable returns without the operational burden of running physical infrastructure. There's also a narrative shift at play. Ethereum is positioning itself not just as digital silver, but as the programmable backbone of decentralized finance and Web3. From L2 rollups to tokenization, real-world asset integration, and institutional staking, Ethereum is emerging as the institutional layer 1 of choice, and Bit Digital wants in early. Still, this isn't without risk. Ethereum's staking economy, while growing, is still maturing. Regulatory clarity remains elusive, particularly around whether staked ETH may be classified as a security in certain jurisdictions. Furthermore, ETH's Layer 1 competitors like Solana, Avalanche, and even Ethereum L2S continue to gain ground in terms of speed, cost, and ecosystem development. So, is BitDigital betting on the right horse? Some analysts see this as a forward-looking move, positioning the company for long-term yield and DeFi infrastructure exposure. Others caution that divesting from Bitcoin entirely, especially when BTC is still the institutional gold standard, might be a risky play, especially if Ethereum's roadmap hits technical or regulatory bumps. What's certain is that BitDigital is no longer just a miner. It's trying to become a staking native treasury firm, and that could pave the way for a new corporate treasury model, one not built on gold-like scarcity, but on yield-generating smart money. So, what do you think? Is Solana ready for an ETF spotlight? Is Ethereum winning the corporate race against Bitcoin? And, most importantly, do you trust World Liberty's WLFI play? Let us know in the comments. And if you're getting value from these breakdowns, smash that like button, subscribe to Dejan's Journal, and turn on notifications so you never miss the next crypto intel drop. Catch you in the next one.